Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie. Let's take a look at the midweek market update. I can't not talk about the massive news today of the recovery of 4 billion in BTC tied to the 2016 Bitfinex hack. Many of us, some of us at least who are still around, were around for that event. What a wild ride that's been for Bitfinex, Tether, Leo, all of the interesting things, let's say, about Tether and Bitfinex. But this is a win for Bitfinex. Obviously, it's a win for law enforcement. It's a win for crypto. I think in general, it shows that there is very little places to hide when you're trying to off-ramp this stuff. That's clearly illegitimate gains, ill-gotten gains, without being caught. Virtually impossible. I highly suggest you read the whole story. The two individuals involved were doing some interesting things in an off-ramp attempt, but they were caught. So that's exactly what should happen for anyone who's looking or paying attention. And it was interesting because I was in the middle of putting this together, which makes it look like DeFi is worse than it is. But this is the Crypto Hacks by platform. And lately we've seen a lot of issues with DeFi smart contracts, attack surface, unaudited code, audited code, all sorts of issues, right? And in the reality, exchange hacks in current dollars far exceed anything that happened in DeFi. You know, if you look at the 650,000 BTC lost on Mt. Gox in 2014, you know, that would take the cake as the biggest hack ever, almost certainly. Here's Bitfinex here, along with a few other things. But another thing to note is over the years how the exchange hacks in general have quieted down, and the low-hanging fruit tends to be more DeFi-related stuff. We did have an exchange hack in 2022 already, Crypto.com. These newer exchanges, the bigger they get, the faster they get, have probably a higher potential of some issues with security holes that they may or may not be aware of. And I think this was like 2FA bypass, two-factor authentication problem. But it's interesting how this has evolved, this picture has evolved, especially because most of us who have been around since 2013 know what happened with Mt. Gox and what's still happening with Mt. Gox. Here's a list of 2011 to 2017, just Bitcoin specifically. You know, my list was everything, but here's Mt. Gox, here's Bitfinex. Certainly two of the biggest Bitcoin-related hacks ever. And you can look at the Mt. Gox coins currently, see where they're sitting, see what they're doing. This is going through the Japanese court system, Japanese law, as far as reimbursement to individuals. Again, a whole nother long story there. But it's important to know like what happened with price at that time. This is the Bitfinex hack in 2016. It's important to know what happened with the price then, how this may impact price going forward, sort of game theory this out, think about what's possible here. Even at that time, again, many of us had lived through Mt. Gox, and we were concerned with what would potentially happen for BTC with the amount of coins at that time being substantial, the monetary value being substantial. But we did survive. Bitfinex survived. Bitfinex pulled an about face to Mt. Gox, and they decided we're going to carry on and do things sort of their own way with interesting debt and repayment systems that came later, but that's besides the point. The bigger point is crypto survives all this hack and nonsense, always does, always will, especially BTC. It's gone through this before. But it's important to look at where have those supply shocks and demand shocks been? Where have they impacted price, if they have impacted price, and what's potentially going to happen here with the Mt. Gox coins, with the Bitfinex coins. The Bitfinex coins, let's say they're not given back, or they're given back based on how the US government handles this. But if we are going for worst case, probably most unlikely case is the government keeps everything, auctions it off, right? You can see how that's impacted price historically, these demand shocks, as Joe Boo puts it. This is an older chart from 2017, but it shows you how things get shifted price-wise. Obviously, this was at sub $1,000 per Bitcoin. We're well past that now, but in the ultra near term, certainly has an impact. The way this is probably going to work out is Bitfinex gets most of the coins back, and then they sell them slowly to repay the Leo holders, and it's not a big deal for price. That's the most likely outcome at this point. But just important to think about game theory out. And while we're zoomed out, I like to talk about the rainbow chart, the pitchfork, the 2-year MA, just sanity checks, really. Where are we now? Where have we been? What does this look like historically? This was a chart first brought forth in 2014 through Bitcoin Talk, I believe. And collectively, all this stuff gives you a sense of overbought, oversold historically. Is there a fit, right? You can use statistics to decide that. There's clearly a fit here, just visually even. And then you can assign sort of overbought, oversold type of verbiage to these zones, should you so choose. Havings on here as well, just to give an idea of what's going on with issuance and supply. But you can see even into early 2021, we didn't quite get to that mega overbought territory, that we usually get to in these crazy bubble tops, right? And even now, we're still in the middle of this rainbow chart. So we're kind of right on course as far as expectations. And for me, as a trader, investor, personally, not investment advice for anybody else, but buys just get better and better and better the lower we go. The assumption is we're not going to fall out of this thing to zero. The assumption is trend is your friend until the end. And in this case, the trend for the rainbow chart has held up quite well. Same is the case with the 2-year MA, which I absolutely love because all the back testing is right there on the chart. It's just like the rainbow chart. People love to discount TA and ask about back testing and say nothing matters. And that's fine, right? You can believe what you want to believe. But for me, the proof is in the pudding right here, in that you can see everything that's happened historically as far as giving you some measure of extremes on overbought, oversold. And even most recently, we didn't quite get to the oversold territory, but we did get closer and closer and closer. We inched extremely close to that. And there's some argument to be made that we won't see this blowout into oversold because we didn't see this blowout into overbought. So trend-wise, again, this doesn't look anything out of the ordinary. This looks sort of as expected. This is a massive range, right? It gives you levels of expectations for overbought, oversold. But as an oscillator, arguably, it's never been wrong, and doesn't predict the future. Certainly doesn't mean it's going to happen forever, that it's not going to be wrong, but it's certainly something to take into account, let's say. And here's the pitchfork. Pick 3 points, you get a rate of change. We did find support thus far after bouncing pretty considerably over the past couple days. But just like any other oscillator, just like RSI, you want to look at, does this fit? Does it tell you anything? Arguably for me, yeah, it does. It gives us a sense of overbought, oversold in the range. And we didn't even quite get to the mega oversold in the rate of change. And we're still okay. As ugly as this looked in the near term, zoomed way in, but zoomed out, we're still within the rate of change expectation as far as what's happened since 2019. Looking at RSI briefly, again, we can draw the decision tree. We can say, okay, let's say we go lower. What is that going to look like? Well, we probably see a bull div on RSI, meaning we don't see a lower low in RSI. If we get a lower low in price, we could, we might not, we probably won't. That's my view currently. In late 2020, early 2021, we saw just a growing bearish divergence. We saw higher highs in price continuously on lower and lower momentum in RSI. So that is considered a bearish divergence. And that, if we do grind lows, is something you'd look for here going into May, going to Q2. Do we see continuous bullish divergence? Historically for crypto, we don't typically see mega continuations of bearishness on RSI, just because there's been a general uptrend bias since inception for BTC at least. So even since 2018, RSI doesn't really get to that mega oversold territory. The last thing on this chart is the long-short ratio on Bitfinex specifically. You can see historically it's mainly been dominated by longs since May 2019. Prior to that, we did have some changes in the long-short ratio in that shorts were dominant in those regions. And what you want to see, and what I'm going to sort of correlate here, is if we do start to move up, I would look at put-call ratio, I would look at long-short ratio, call-put ratio, whatever you want to think of that as. And what are people doing on the way up if price is going up, right? Or what are they doing if we're going down? Another way to game theory this out. If people keep shorting or they're going short on the way up, that certainly gives more fuel to the momentum as we keep rising. And in general, most people on aggregate, the crowd is terrible at trading. So you're going to see stuff like mega short interest at the bottom of the range, right? You didn't see the short interest before the range. You saw it at the bottom. You did see some correct short interest building leading into September 2019, but that's certainly not the norm, let's say. Even here, I think all-time high in shorts is actually basically the 2018 low. So when you're talking about the crowd, we can talk about overcrowded or not. And right now, longs are certainly more dominant than shorts in a big, big way, but it's nothing out of the ordinary since the range. We're still in the price range, but just something to watch for sort of on the background. And the more near term is, again, this range we're in over the past year. For me personally, as a trend trader, I have a preference for trends on the daily. This is all kind of just noise to me. Yeah, it's a massive range, but I'm not going to get excited about trying to trade this chop personally. This, for me, is an area where, again, if you believe in the range, you believe in the oscillator, the closer we get down here to this level, it's oversold and potentially overbought at the top. And again, depending on what this looks like at the top here, we had another example of bearish divergence in RSI, but you want to look at volume, you want to look at price structure as we approach these highs. So that's one thing to consider. The other thing to consider here is the volume profile of the visible range. This is where most of the volume has been historically since 2021. From 30 to 38, you could read that as support now. 46 to 48 as resistance, 55 to 58 as resistance as well. And upcoming, you'd want to watch for this crisscross in 5200, which ETH is actually well on its way to looking like it's going to have one of these crisscrosses. So my whole point with this is, are we neutral, are we bullish, are we bearish? Zoomed way in, we're still mildly bearish, leaning neutral. Zooming out a little bit, we're clearly neutral. We're in the past year's range. Zooming way, way out, we are well on track to where we should be based on projections and rate of change estimations, let's say. But I would definitely watch for this upcoming, because just as you saw headlines with a death cross, you're going to see that with a golden cross. That's what it's called. And ETH is well on its way, like I said, to actually crisscrossing, which is incredibly bullish to see basically a trend reset. And let's say we do make higher highs here. The expectation when you break a range is we move to this 1618 fib and or measured move, which in this case is between 85 and 100K. We also have yearly pivots to help us with this move because they measure mathematically the highs and lows of the previous year and they spit out levels for the next year. So these were as of January 1st. These won't change the entire year. It's another way to gauge, kind of based on rate of change as well, just where we should be based on the prior year's price action. So we're still slightly below expectations of the yearly pivot at 45 or 48, sorry. So that's definitely a key level for BTC here. Also on the cloud, another way of looking at, are we bullish, are we bearish? If we're above, we're bullish. If we're below, we're bearish. In between that, there are these MA-like crisscrosses where you get to see red over blue is bearish, blue over red is bullish. And in between those cloud levels, you get to see the fine tuning of reversals, let's say. So what you're looking for upcoming into March, into Q2, this is going to take some time in the near term. I think it's going to take at least a couple weeks. We may double bottom here. We may inverted head and shoulders here on lower time frames. We may paint some sort of ugly falling wedge, right? There's all sorts of possibilities here. But ultimately what I'm looking at, aside from chart patterns, price action, is this cancellation of bearishness, basically. When the TK lines crisscross here, or when like an MA cross happens, momentum shifts. So you can say, okay, if I'm looking at technicals and I'm looking for technical indicators to help me with trend, this is definitely something I'm watching, is into March, into April. How does this look for a move towards 51? How does this look? Very similar. I mean, you have it right here on the chart. That's the beauty of this range. You can back test anything over the previous year. So you'd expect this TK crisscross here coming up probably by mid-March at the latest, and then potentially seeing this, what's called an edge-to-edge move in the cloud, much like you did here in the opposite direction. You saw it here. Sometimes it's messy, sometimes it's perfect, sometimes it's spot on. But what you want to see here is price sort of get picked up into the cloud at around 40K and then move its way toward that 51 level. So as a cloud technician, that's what I'm looking forward in mid-March, late March, early April into Q2. Something else you can look at is the Alligator Fractal system. This is just low time frame MAs, very similar to any moving average strategy, crisscrosses, that sort of thing. And it's really simple because we're either bearish like we were in May, like we were in November, December, January, into February, where you have blue, red, green as far as MAs are concerned. You have slow over fast MAs, or you have fast over slow MAs, which is what we're starting to see now, similar to the August, right? This doesn't tell you ultimate target or anything like that. It just gives you a heads up that, hey, we're probably more bullish than bearish. This is probably a reversal at this point in time. So we definitely want to see these lows get challenged a little bit. We want to see, which is what the fractals help you with, fine tuning of directionality, because it gives you an idea. Are we breaking these? We're going to get a fractal at this wick, for instance. Okay, we may get another lower fractal below that, but ultimately, what you want to see is you want to see price making higher highs continuously. Just as if you were bearish, we saw lower lows, right? We were breaking below every single fractal that was made. Even this fractal, we broke below it. The fractals after that, we broke below, or kept breaking below. And we stopped breaking below. So the entries stopped for short entries or selling or whatever. And now we're flipping into that long territory. And then real quick for on-chain stuff, you'd expect on-chain activity to start to pick up a little bit, and it has. I don't want to overstate what this looks like because it's minimal, but again, we're not going down anymore. That's really the important part here, is that on-chain activity is starting to pick up, transactions starting to pick up on a weekly average, active addresses starting to pick up on a weekly average. So that's certainly within expectations. Something else to pay attention to, like in reversal periods, is funding. So this is derivative funding on various exchanges listed here, USD or USDT. And as you see the end of a trend, let's say, you see these funding rates just get blown out. Funding got super high here. Funding got relatively low here. This means, in this case, most recently, shorts were paying longs to be short, okay? And if you're paying to have your position open and you're wrong, you're more likely to close that position. That's one way to read this. Now, if on the long side, this gets painful, this gets more and more painful to hold this position, which is why you typically see, not always, but you typically see correlations with funding and local highs or local lows in price. When funding gets a little bit out of whack, that's not always an ultimate indicator, but in this case, it does look pretty correlative with the lows here. So it's definitely something to watch for. Does funding stay negative? Does funding get neutral? Does funding get super positive as we move up here? If we move down, what happens? Does funding get positive again? Will that have an impact on price? Definitely something to watch. Something else to watch, and that I've talked about for the past 3 weeks. I'm not going to go into it in major detail, but looking at Bitcoin, Ethereum, SPX, Nasdaq correlations, and there's been a lot of talk of coupling and decoupling, and it's undeniable that since year to date, since January 1st, largely we've been correlated. You can use math and decide like what the exact correlation here is, but ultimately, even until January, February, we were basically lockstep. And then early February last week, we started to lose that correlation a little bit. And ultimately by Friday, for me, that's when I was satisfied with on low time frames. We started to decouple a little bit. Legacy traditional markets flat or down, whereas crypto was recovering in a much bigger and broader move. Even today, we saw legacy up, crypto down. This doesn't mean it's going to be lasting, but it's definitely something to watch for going into Q2. My general eyes are seasonality wise, Q2, Q4, things look more bullish. Q1, Q3 historically have been more muted. They've actually, on average, been like 1 to 5% positive for BTC versus seeing higher returns in Q2, Q4 historically. Doesn't mean it's going to happen in the future, but certainly something that's always in the back of my mind is seasonality. And looking at ETH, just switching gears real quick to that, prices up, active addresses up, transactions up. That's what you want to see. That's what you expect to see. You want to continue to see that. Just looking at the correlations here with ETH, super strong on active addresses. The more network activity, the better, no matter what it is. So it's always good to see network activity come back online there. Looking at ETH's 1 year MA and the multiplier in the red here, ETH actually flirted with that oversold territory, bounced. And we may get this double bottom characteristic yet, right? We're not out of the woods by any means. We may go deeper, right? This doesn't tell you that this is the ultimate bottom or anything. It just says historically, based on the past year, that we are below the 1 year average, right? And maybe this thing got so out of whack, it's going to need to retrace for a year, right? It doesn't give you any idea of directionality per se, but it does help you as an oscillator figure out overbought, oversold, potentially on lower time frames. In general, this has been mostly correct since 2016. So I like it as an indicator. ETH on the cloud, very similar to BTC. You're looking for this crisscross as of yet for bullish reversal. You're looking for price above the cloud. The TA is generally, like I said, pretty simple because we're in the same range we were since the beginning of the year. ETH, not as much, but mostly, at least since April. So all the same TA applies. You want to be back above the 200. You want a bullish 5200 cross. You want to be back above the cloud. ETH actually had a reset completely now of the longest bull run it's ever had. And just like a crisscross happened in 2019, 2020, right? These MA crosses aren't necessarily going to play out how you expect, but it does give you some idea of sentiment of what's going on in the near term. And if this thing can crisscross like it did in 2020, right? It doesn't tell you where this is going ultimately, but it does tell you, at least help paint the picture for trend, which is my favorite thing to trade personally. ETH's Alligator Fractal stuff has started to cross bullish, just like BTC, very reminiscent of this July activity. So it's early, but at the very least, we stop making lower lows, right? That's step one. Stop going down, stop making lower lows, and then we may go neutral, we may consolidate. This may head and shoulders out, right? Shoulder, head, shoulder, neckline at 3,400. This may take a week, a month, whatever, but it's something to watch for at 3,400. What does price structure look like? Is trend metrics on your side? Now it'll be interesting to see if we get this chart pattern set up with a 5,200 crisscross. Maybe nothing, maybe not, but for me as a technician, I'm like, yes, this is confluence. This is what I want to see. We've consolidated long enough. This looks good for additional upside at that point in time. And then DeFi, just like everything else, survived the range lows, still struggling to get back into the middle of the range, but it's got time. And ultimately, it didn't continue to fall off the table, right? It hit oversold on RSI. TA seemed to matter to some degree in that extent. And using the DeFi perp, which is an aggregate on FTX of DeFi coins weighted by market cap. Most of this is like Uni and Aave and stuff like that. But the middle of this range is at 10.3. We're at 7.5. And just like we did in June, July, we may double bottom. We may revisit these lows, right? All sorts of possibilities here. But ultimately, we're still in the previous year's range. So nothing super, super exciting, as far as I'm concerned, is going to happen to the upside until we're at the very least back to the midline of this range, right? And again, that may take all of the rest of Q1. And let's say we get a bullish Kumo breakout or price above the cloud into Q2, price above the 200, price above all this VPVR resistance, then I can get extremely bullish, just like I was here. Was I wrong? Of course I was wrong. Look, we reversed, right? But the trend is telling me, the trader, this is me speaking, we're bullish or we're bearish. And if we're bullish, we expect higher highs. If we're bearish, we expect lower lows. If we're in a range, we expect to be in the range or not in the range. In general, it's pretty simple as far as what I'm looking for and what I'm looking at. And then lastly, there's been some talk of Bitcoin dominance. And interestingly enough, if we look at dominance against the 200-day moving average, when dominance is below the 200-day moving average, Bitcoin dominance being Bitcoin versus the world as far as a percentage, market share, let's say. When Bitcoin dominance is below the 200-day moving average, alts generally do better. When Bitcoin breaches the 200-day moving average historically, Bitcoin's done better. Bitcoin season is what I call it. But we've got that on our side for the Bitcoiners. We've got this triple bottom potentially. I don't like putting TA on dominance, but it's something to look at because it's there and we have a chart for it. And you've also got this kind of broadening wedge megaphone that could bring us back to this 56%-ish zone or higher, 56 to 60%. And all this would mean generally is BTC sort of outperforming alts in the near term. So what'd you like, what'd you hate, what'd I miss, what'd you love? Let me know in the comments below. Like, dislike, share, subscribe, and happy trading.